Hey guys, Kevin Bupp here, and I want to welcome you to another episode of the Real Estate Investing for Cash Flow podcast. Where our mission is to help you build and maintain massive amounts of cash flow through income producing real estate investments. Now, guys, our guest for this week's show is corporate housing expert Angela Healy. Now, Angela is the CEO and co owner of Avenue West, which is a leader in furnished residential rentals for traveling professionals, relocation clients, and corporate teams. Now, under Angela's leadership, Avenue West has expanded into multiple markets across the U.S. and landed on the Inc. 5000 list of fastest growing companies. And so, guys, in today's conversation, we're going to dig into Angela's corporate housing investment strategy. How she chooses the right properties and markets. I guess what investors really need to know to succeed in this particular niche in this space, and also the lessons that she's learned scaling Avenue West into a multi-million dollar enterprise. And so with that, I'd like to welcome Angela Healy to the show. How you doing today?
Great. Thank you so much, Kevin, for having
Yeah.
me.
Excited to have you, and excited to learn about your this business model. I haven't had anyone on the show for a number of years now, talking about this strategy, and so definitely it's going to be probably fairly new to our listener base. But before we dive into the deep end, Angela, let's back it up a little bit. And I gave you that brief introduction. I know there's a little bit more to your story. So why don't you,
Mhm.
just tell us more about yourself, and then also how you found your way into the corporate real estate world.
Real estate. So I started in real estate very young because my parents purchased rental properties and they decided to furnish them and rent them out by the room because they felt that they could maximize the income on the property if they could rent it that way. And so I tagged along with my parents since I was like 7 years old and helped clean, helped fix pipes. I remember being underneath the house helping my dad fix one of the water lines, holding the flashlight while he was doing um, but they were able to successfully put four children through private college with that rental income because they spent 100% of their time making sure those properties were maximizing the income that they could out of them. And I knew very early on that real estate was a great way to generate cash flow outside of your normal job. And so I knew I wanted to get into that right away.
Mhm.
I purchased my first property when I was 23 years old. I purchased a condo out in San Francisco and realized very quickly that I was house poor and I didn't like feeling like all I could do was eat ramen noodles and barely have any fun or do things. I was living out in San Francisco. I wanted to have fun. And I stumbled across an opportunity where I was able to rent this property fully furnished to a corporation. And that was kind of my entree into corporate housing and what it had to offer and how I might be able to get further into that opportunity. The corporation ended up renting the property from me for 5 years. So they
Wow.
rotated their employees through the property. And I just had to keep paying the mortgage and the utilities. And anytime there was an issue, I had a management company there that helped me whenever there was an issue. And I made quite a bit of money on that property. Um, so I realized that there was more to real estate than just what my parents were doing, the traditional, they had traditional rentals that they rented unfurnished. They had this hybrid model where they were renting by the room. You know, the corporation was willing to pay me top dollar, and I really wasn't having to do a lot of work. So I felt like it was a sweet spot
Hmm.
within the real estate industry. And I needed to figure out how to get further into that um, because I just happened to have the right property for this particular corporation for them to rent it for 5 years. But I then moved to Atlanta and I couldn't duplicate that model. I couldn't figure out, well, how do I find that corporation that can do this for me again, but in real
Yeah.
estate in Atlanta. And so I realized that there was really a sweet spot. There's maybe 1% of properties that make up this type of property that a corporation will be willing to pay top dollar for. And I've been able to kind of tweak that model and figure out exactly, okay, They really want to be within walking distance of their location. They want it to have
Gotcha.
full amenities, like they want to have a doorman, they want to have pool, they want to have workout facility. They just want to be able to provide their employee with full amenities, and they want it to be in a very safe area. They just have these very strict requirements of what they're looking for. And if you can meet that, you can then maximize that piece of property into its best cash flow opportunity.
Okay. No, that there's a lot to unpack there. So let's start with that first one. Your property, you said San Francisco, correct? That was the
Mhm.
first one.
Mhm.
What would I guess it sounds like, by renting it to this corporation, they, you referenced that they pay top dollar. So probably quite a bit more than that of what you would have received if you were to just put it out into the normal rental pool, right? Just a standard,
Correct.
annual rental. What type of premium are we talking about here? 10%,
Sure.
20%, 30%, and I know it's probably not across the board, but just generally speaking, let's use that one as the example. What
Yeah.
was that premium that you got paid?
So today across the country, typically if you're renting an unfurnished property, say you have a one bedroom condo, maybe you're renting it for 1,500, maybe you can maximize that at 8,000, maybe 2,000. We're probably getting somewhere between 3,000 and 4,500 for that
Wow.
exact property. Now you're going to pay me a management fee because I've developed these relationships with the corporation, but
Mhm.
you're still going to make more than you would renting it out unfurnished. Now you might be able to do it yourself doing Airbnb. Typically, that's more in a vacation rental
Mhm.
property, and you're doing turns quite frequently. Maybe you'll have someone stay for 3 days and you're doing a turn, or maybe they might stay for a week. You might be able to do furnished finders and get the traveling nurses. Again, they're probably not paying that top dollar that you would get from a corporate client because they're given a per diem and they're going to try to keep as much of that per diem as they can. They're going to try to
Mhm.
look for a property that's going to, be as economical as possible. Whereas the corporation, they're trying to make an impression on this employee. So it's either an executive that they're relocating, or maybe it's a consultant that's in on assignment. Maybe it's even nowadays our interns are receiving nice packages with properties as well, because the corporation realizes we need this next group of young talent coming through, and we want them to come and stay and enjoy their time with us and then sign up and be an employee of ours long term.
Yeah.
So it's the impression that the corporation's trying to make, and they're also responsible for their safety. So security is their number one thing that they look at, because if something happens to that employee while they're in their corporate apartment, they could be liable. So they can't put them, in a co-environment where they're sharing a property with somebody else. It's got to be their own property. It's got to have the security, um, and so they're willing to pay kind of that top dollar if you're willing to put everything you need to into that
Okay.
property to make it right.
And I know, again, using that first property in San Francisco, you'd mentioned they rented it for 5 years, a 5-year agreement. What is that typical, or is there a
They
more
didn't,
typical
they
length of
didn't
stay? And
sign, yeah, they did not sign a 5-year agreement. I was
okay,
going
okay.
month to month with them.
Oh
They
wow.
just happened to stay for 5 years. So sometimes when I speak with a property owner, they want that long-term lease. Like, I have to have this long-term lease in order for me to feel comfortable knowing that I can pay that mortgage. But if they have that little bit of flexibility and will allow us to go month to month, there are times, but my longest running tenant actually stayed with me 15 years in one property.
Wow.
Only reason he left, COVID. Had COVID not hit, he probably would have paid that owner's mortgage off. But obviously COVID switched everything. So
Yeah. So how do you, is this kind of reverse engineering? You'd referenced that you want to be, close to these companies, right? That are seeking a corporate housing option. So is it, you go into a new market, identify corporations that have this need, and then basically reverse engineer it and buy a property that kind of fits that profile? And, or is there a better approach?
and a lot of it, so as an individual property owner, the likelihood of a Microsoft or an Apple or, one of these big companies that does a lot of corporate housing coming to you for your one property is
Mhm.
next to impossible.
Sure.
You really need to partner with a company like Avenue West that has that business relationship already,
Mhm.
and then we can then place the employees into your property through our management program. So we have an exclusive relationship with our property owners, where they're not posting it on Airbnb. They're not, trying to also rent it. They're giving it to us exclusively so
Mhm.
that then we can turn around and rent it to these corporations. And yes, we are very specific in the properties that we look at. And unfortunately, sometimes people get upset with us that we don't think their property is right. But it's just been, we've been doing this for 25 years. We know what they're looking for. We know what they want.
Mhm.
Trust us, trust what we have learned and done. And if you are willing to do what we're asking, you know, we could really find a great partnership and make that property really cash flow for you.
Yeah. Or let's talk about the property profile a little bit. Is it mostly just like condos that are in walkable locations, or does this model also lend to single family homes? I'm assuming there's got to be certain instances where an executive needs corporate housing, but they've got a family in tow, right? They've got a wife
Exactly.
and multiple children, dog maybe. So
Yep.
what does the I guess let's talk about the span of the properties. What do these profiles look like of the ideal property?
Yeah, so about 70% of our properties are those one bedroom condos because
Okay.
if they bring a group of consultants, even if it's 10 consultants coming in, it's going to be one property, one bedroom, I mean, one person, one bedroom property.
Hmm.
Um, but yes, we have to have the full scale and full range of what they're going to need. So, 2 bedrooms, 3 bedroom townhomes. We also do full homes. We also do executive level homes. So we do have to have that range of properties in order to, was we don't want our corporate clients to say, oh, well, you're only good for this piece. We want to be their full housing solution. We want to be able to provide them with everything that they need. But we also want to make sure that they're going to have enough volume. Are you going to have enough people that need that executive level house in, the middle of the top neighborhood with the best school district? Or is it a one-off and we should go and rent that property for, and typically when it's a larger property, it's a higher end executive. So
Hmm.
they're typically going to start maybe with a 6 month lease, or something like that, because they're going to have to sell a property where they came from and then decide where to buy here. So the process is going to take a little bit longer than it would if it was just, you know, a single person coming in and trying to find a new place to rent or a new property to buy. That process is a lot quicker. So their timeframes are a little bit shorter. On average, they're about 99 days.
Got it. Got it. Okay. I think I've read a little bit on Avenue West, and I read that you guys, for the most part, focus on second and third tier cities. I guess
Mhm.
what makes those second and third tier cities attractive, and more specifically, what are some of the, I guess, you must have indicators that you look for in a particular marketplace?
Mhm. So we do have properties in San Francisco, in New York, in some of the bigger properties as well. But what we were finding from an ownership perspective for the property owner, that they were able to yield a better return in a second or third tier city. So if you go into like St. Louis, for an example, the value of the property that you're able to purchase is a much lower price point than it is in New York.
Hmm.
And while we're able to get, higher rents in New York, like maybe we're getting 8,000 a month, but your mortgage is 7, or 6, or,
Yeah.
so the differential there isn't as great as it might be if you go into St. Louis and you purchase something for 350,000, and we're able to get 4,500 for that, or, or something. So the differential there from a cash flow, from a true investor perspective, true cash flow perspective, and the amount of money you had to put down and things like that,
Hmm.
it really cash flowed for investors better in those second and third tier cities.
That makes sense. Okay. I know there's lots of conversation around regulatory changes and restrictions that have been implemented over the years, more specific to like short-term rentals, Airbnbs, things of that nature. And so, I guess, are there any? any risk related to that as it relates to this corporate housing structure? Or I guess maybe even more specific question to ask would, um, do you guys kind of get lumped in? Does corporate housing almost get lumped into, when policymakers are looking to pass particular bills or protections or changes to the regulatory standards? Do you guys, is there a risk there? Is there a threat to your business
There
model?
is.
Okay.
And I've spoken with a lot of economic development centers, a lot of people trying to explain that they need to not lump us in, that we
Mhm.
need to be treated differently, that if they're going to do a knee-jerk reaction and say, we need this housing to come back into the market, we need to get rid of Airbnb, the nightly stays, stop at that 30-day minimum because the economic development centers in a city will spend millions of dollars trying to bring corporations in to move their headquarters to the area, to stimulate jobs, to, do everything that they're doing. But if they do a knee-jerk reaction and they say, okay, you have to have a 6-month minimum lease or a 12-month minimum lease, um, you are actually deterring those corporations from coming into your city to bring their headquarters there because then they can't provide the employee with that midterm option, that 99-day option, but they want to go month to month in case they find a property sooner. Um, if they can't provide that to their employees, then the cost of the relocation is going to significantly increase for the corporation because they're going to have to provide them with 6 months worth of housing in order to meet that legal obligation. So, so when corporations are looking at the overall, okay, you're going to give me these incentives and we're going to do this. Oh, but you're restricting my housing. So maybe this city over here is going to win the bid instead. So I've been trying to speak with the economic development centers in different areas and different politicians trying to explain how we are different because
Mhm.
most people they don't know a lot about this midterm housing or corporate housing unless you've had the opportunity to stay or get involved with us somehow.
Yeah, no, that's a great point. Help me understand how clients work with Avenue West. I'm going to make some assumptions, and please correct me if I'm wrong. It sounds like you probably have your own investment portfolio, personal, that you kind of manage through your company, Avenue West. But it sounds like you also work with other clients, as a specialized third party property management company. Is that an accurate statement?
So I used to,
Okay.
and what I found was that investors would come in and they would say, "Hey, I think you're going to rent your property before you rent my property. So how
Okay.
do you even out that playing field?" And so over time, I have found that it was easier for me to not have properties in the overall rental pool to alleviate that worry, which everyone instinctively, you're always going to try to rent your own properties. It's going to affect your cash flow better. And so if I can alleviate that, and then everything is an even pool of our options, it made people feel more comfortable with
Okay.
with my management of their
So
property.
strictly a property management company now that specializes in
Yes.
this midterm rentals. Okay. So what does the typical vendor client relationship look like? Is it an investor that already owns some property? They come to you and you kind of put it through your filter and determine whether or not this could be a fit. It's a good location. It could be a fit for one of your corporate clients, or does it, you talk to an investor and you have a need, you have, corporations that have particular needs, types of housing locations within a second or third tier city. And then basically that you send that investor goes out and searches for that type of property. They buy it and then they put it in your, in your pool of rental housing. I mean, how does the normal relationship work?
So right now, the majority of the people that we're working with, and it's one person, one property.
Okay.
So we'll target a building. So the Spire building in downtown Denver is our most requested building in Denver. So we work with the HOA there, and just try to get the word out that we're really looking for properties to come into our program and stay with us. And so when we find and identify a building, it helps us to have many properties in that building. So when that group of 10 comes, I can offer 10 spires. And they all want to be in the same building. So sometimes people in your program, and that is a complete false you really need multiple properties in your building in order to be able to attract those larger groups. And so most of what we've been doing is targeting specific buildings. Now, if I have, like, we're working with some manufacturing companies that have property or that have a need of properties in really remote areas. So, if an investor came in and said, hey, what if we built a certain amount, or what if I buy this apartment building right here? It has 20 units. Do you think you'd be able to rent those? Well, we very well might be able to, based on that contract that we have with that manufacturer right next door. Of course, you're putting all of your eggs in one basket for that property because it's just that corporation that's going to want to purchase from
Hmm.
that property. So I do also try to tell people, it's just like stocks and bonds. You want to be able to have um, more corporations being able to rent your properties than just one. Because what happens if they do a management change, and so then they put a hold on hiring for 6 months while they're doing this management change? Then does your property sit vacant for that 6 months? So that's kind of the risk of specifically putting your properties right next to one corporation. Whereas if you can go into kind of a second tier city, like Denver, there's many corporations in that city. So you're
Hmm.
not just dependent on this particular manufacturer or this industry. There's lots of different industries, lots of different corporations that could potentially be renting the property.
Got it. Got it. I guess as far as like, the finishes of these units, I mean, what is the typical expense to actually furnish these units with the appropriate furniture and fits and
Mhm.
finishes that these executives might want?
Yeah, so on a one bedroom, we're typically able to furnish it for about
Oh,
$10,000. So not too bad.
no.
And the finishes, though, typically you're hoping that it would be like a Class A property, a building with a doorman and all those amenities would typically have granite, stainless steel, whatever the normal high-end finishes would be, you would expect that building to have that already. So hopefully you're not having to go in and gut the property and add stainless, granite, nice cabinets, flooring, that kind of stuff.
Got it. And I know that at this present time, you don't have your own investment portfolio, just so there's no conflict of interest in working with your clients. But I guess putting your investor hat back on for a second, because a lot of our folks that tune in here are active investors. They're buying the properties. They if they have an interest in the space. I guess from an underwriting standpoint, you're looking at an opportunity. There's a corporate need in this marketplace. What building they want to be in. When you're
Mhm.
underwriting a property, are you underwriting it based on what that corporation will pay you, or are you actually underwriting it based on what I guess what the standard market rate would be, unfurnished? Because again, there's no guarantee that that corporation is going to need this in 3 years or 4 years or 5 years, right? And so, could you potentially have the risk of overpaying for a property because it's underwritten to maybe that higher price point than that of what just a standard market renter might be paying?
Yeah, I think you always want to run your numbers based on a traditional investment opportunity. If I'm going to
Okay,
rent this unfurnished, does it make sense? And
yeah,
then say to yourself, okay, now if we can add the corporate piece to this, then that's going to be gravy on top of what I'm doing. So I don't want people to overpay for properties. You want to buy in the right markets and sell in the right markets, and that's always, a crystal ball. Is this the right market? Is it going to continue to go up? Is it not? I sold that piece of property in San Francisco when I thought it was the top of the market. And I had bought it for 185,000. I sold it for 385,000. So I made $200,000 on it. Of course, if you go out there today, they're worth like 800,000, so it's that crystal ball. I
yeah.
really felt like I did great on that investment. And if I do look at it just for that little period of time, yes, I did. But had I held it, what might have happened. So
Yeah, and I think real estate, generally speaking, obviously there's ebbs and flows and there's different parts of the cycle, but it really is a get rich slow strategy, and
yes.
and you can have pops here and there and get lucky and time the market right, but really if you hold over the long term, it typically works in your favor, especially in
Yes.
in, in primary markets like a San Francisco. Um,
Mhm.
I guess what are you most excited about here over the next 5 years? I mean, where do you see the biggest growth opportunity in this corporate housing sector?
So, in the last 6 months, we have seen a significant increase in manufacturing. So I'm very bullish on manufacturing. We're working with a lot of foreign companies that are bringing good money into the United States and building these factories, building and getting the manufacturing back into the United States. I think that that has been wonderful for corporate housing. But then also, oil and gas is a very big market in corporate housing. Tech is big market in corporate housing. Healthcare is also very big in corporate housing. So there's plenty of other sectors and segments that can really um, drive your overall business, but it's just good to see the additional activity that we've been seeing. So.
Okay. And
Mhm.
so, again, for those that are listening here, that they have you piqued their interest. Maybe they'd like to diversify and get some of their capital allocated towards this corporate housing sector. They want to buy properties that kind of fit this profile. How do they get involved in the space? How do they work with a company like Avenue West? I mean, what does that client vendor relationship look like, and how can they start getting some capital put into this sector, as soon as possible?
Absolutely. So they can certainly give me a call or find me, Angela at avenuewest.com, or our web address is avenuewest.com. Be happy to speak with them about potential opportunities that we see and might have available. We are part of an industry association, the Corporate Housing Providers Association. So certainly looking and seeing what they have. Traditional corporate housing does rent apartments and rent furniture and put the employee in that rental property. But there are a couple of us that are doing kind of this model with private investors. So um, hopefully we can work with you and
Okay.
see if we can make this work.
Okay. And the website again is avenuewest.com, correct?
That is correct. Yes.
Okay. Fantastic, guys. We'll put that in the show notes. And any parting words, I guess. I mean, I know that was, roughly 30 minutes, but I mean, I'm sure we just glossed over, different aspects of the business. But I mean, anything else that we haven't hit on regarding this corporate housing model that you feel is relevant for folks to understand, or just have better insights on?
Absolutely. So, you had mentioned, real estate is kind of that um, slow go, buy into
Hmm.
it and hold it for a period of time. And one of the people that I've always looked up to is Warren Buffett, and I know he takes that approach with the stock market. How do we
Yeah.
find these companies that are good and solid? So if you're finding real estate that kind of fits that model as well, and maybe it starts as a corporate housing unit, and then maybe as time goes on and the property, loses its A plus class and, goes more to a B property, then you turn that into an unfurnished, or maybe then you turn the money into something else. So there's different ways and different times when the corporate housing piece can be an additional income booster.
Hmm.
And then you hold that property longer and turn it into an unfurnished. So
Okay. Well,
mhm.
fantastic. Well, Angela, I appreciate you joining us here today. It's been a pleasure having you on the show.
Thank you so much for having me.
Alrighty, guys, that's all we have for this week's show. So until we meet again next week, this is your host, Kevin Bupp, wishing you huge success. Take care now.